Welcome to Paolo's channel. I'm Palos from Los Angeles. This channel is for latest news to everyone. If you are interested in Japanese, please check description. This video has a Japanese version. $1.8 trillion for U.S. deficit. What's going on? Recorded the federal deficit of $1.8 trillion. Main concern is U.S. economy in the future. Let's make it in detail. As of July 2024, the Federal Reserve hinted at possible changes in interest rates in response to ongoing inflation concerns. This has been a topic of discussion among economists and policymakers. The U.S. economy grew by 2.8% in real GDP during the second quarter of 2024, driven by increased consumer and business spending, though the growth was slightly offset by a rise in imports. Services inflation reached 4.1% year-over-year in June 2024, primarily due to strong demand and potential wage increases, while energy prices remained stable. The Federal Reserve is keeping the federal funds rate at 5.25% to 5.5%, with possible gradual rate cuts later in 2024 if inflation moderates, and is also reducing the money supply through a quantitative tightening program. Despite challenges such as the resumption of student loan payments and rising delinquencies, consumer spending remains robust, supported by a tight labor market, although balancing household debt with disposable income is essential. The fiscal deficit surged to $1.84 trillion in 2023, but it is anticipated to narrow in 2024, which may reduce its stimulative effect on the economy. After declines in 2023, both business investment and housing activity are showing signs of recovery, with a cautiously optimistic outlook for 2024 despite ongoing high interest rates. GDP growth and economic activity. According to U.S. Bureau of Economic Analysis, the U.S. economy has shown resilience with a 2.8% growth in real GDP for the second quarter of 2024. This growth was primarily driven by increases in consumer spending, inventory investment, and business investment. The uptick in consumer spending suggests that despite various economic headwinds, consumer confidence remains robust. However, imports also increased, which slightly offsets the GDP growth since imports are subtracted in the GDP calculation. Inflation and prices. According to Deloitte, inflation remains a key focus, particularly in the services sector, which has seen a significant year-over-year price increase of 4.1% as of June 2024. While energy prices have been relatively stable, the overall inflationary pressure is mainly from services, indicating strong demand and potentially higher wages in this sector. The Federal Reserve continues to monitor these trends closely to inform its monetary policy decisions. Federal Reserve and monetary policy. According to J.P. Morgan, the Federal Reserve is currently holding the federal funds rate steady at 5.25% to 5.5%. However, if inflation moderates as expected, there could be gradual rate cuts starting mid-2024. This approach aims to balance the need to control inflation without stifling economic growth. Additionally, the Fed's quantitative tightening program is projected to remove around $1 trillion from the economy through 2024, which is part of its strategy to reduce the money supply and manage inflation. Consumer spending and labor market. According to J.P. Morgan, consumer spending has been a significant contributor to GDP growth. Despite potential stress factors such as the resumption of student loan payments and increased delinquencies in subprime auto and credit card loans, overall consumer spending is expected to remain positive. The labor market remains tight, supporting employment and income levels, which in turn sustain consumer spending. The balance between household debt levels and disposable income is crucial for maintaining this spending trend. Fiscal policy and federal deficit. According to J.P. Morgan, the fiscal deficit has seen a sharp increase, nearly doubling to $1.84 trillion in 2023, or 7.4% of GDP. This significant rise in the deficit reflects higher government spending and lower revenues. Looking ahead to 2024, the deficit is expected to narrow, potentially reducing its role as a stimulus for economic growth. This shift could pose a slight drag on the economy compared to the fiscal boost observed in 2023. Housing and business investment. According to J.P. Morgan, business investment and housing activity have shown signs of recovery after notable drops in 2023. While higher interest rates have posed challenges, the outlook for 2024 is cautiously optimistic. Improved performance in these sectors could support broader economic stability, even if growth rates remain below trend. U.S. economy is navigating a complex landscape with solid GDP growth, moderated inflation, and a cautious yet proactive monetary policy stance from the Federal Reserve. Consumer spending and a tight labor market continue to drive economic activity, while fiscal policy adjustments and the housing market's performance remain areas to watch closely for their impact on future growth. Thank you for watching this video. If you are interested in Japanese, please check description. This video has a Japanese version. Please comment on what you are interested in. Also, please subscribe and good button as well. See you next time.